Real estate agents, when you're accepting an offer, it is really essential that you talk to the loan officer. Your commissions are dependent on it. Your seller's house sale is dependent on it. Where 35% of all pending offers go back on market for various reasons, why make a fallen apart mortgage the reason why? A lot of times it can be prevented by you asking some questions. So I thought I'd outline some different questions that you can ask that loan officer. And if you do not have their buy-in, if they say, I can't talk to you, then you say, then I need you to go back to the buyer and get a written authorization so that you can talk with me. Otherwise, I'm going to be looking to accept a different offer. All right, let's get started. So the first section would be financials. When did you verify the person's income and assets, and do they have enough money for the closing cost? Question number 2, is the credit report that you have in file the one that you can use for the closing? Is there any documentation that you need that the buyer has not provided or cannot provide? And what is your process timelines? What is your underwriting process taking? The second set of questions moves more into the process with that first question, and then asking, are there any third-party vendors that you need to wait on? That would include things like MSHDA, USDA-RD, 4506Ts from the IRS. Things, broker, if you're a broker, you want to know, is that person a direct lender? Do they have in-house underwriters, or are they a broker? Will they have to send out that loan for approval? And then what are the various turn times for the things that they answer yes to? Are there any pending conditions that the buyer has to meet before closing that you know of? And does the buyer own any other real estate? Based on that answer, do they have to sell that real estate to qualify? Has that real estate that they own been included in the debt-to-income ratios? And finally, before I move on to vetting the loan officer, you want to know about the appraisal. Is the appraisal someone that you select? Is it a third-party AMC? How is that third-party AMC make the appraisal selection process? For example, in our company, we have chosen our appraisers and have them into pools. So they're localized appraisals, let's say in Lapeer County in Michigan versus in Macomb County, Oakland County, Washtenaw County, Livingston, etc. So you want to know, where are they pooling their appraisers from? Is that AMC a national AMC? Is it a localized AMC for the appraisal management company? And then the last set of questions is all about the loan officer. How long have you been in business? How many loans do you currently have in process? How many are purchases? How many are refinances? Who's on your team? You want to know, for example, I have an assistant and a processor, so we have 3 sets of eyeballs on our files, but we keep it very succinct in that we don't have more than those 3 sets of people, and it's always myself and one other along the process. And then finally, what is the modus operandi? How are you going to update me, and when are you going to update me on the status of the file as we progress to closing? Remember what I said earlier, 35% of all deals go belly up. They go back on the market. You have to relist that house. And a lot of times it's for inspection, or maybe an earnest money deposit wasn't collected and they don't have funds for closing. There's so many different reasons, but you do not want that loan being one of the reasons that it goes back on market, where if you would have made those phone calls, you would have discovered in your gut that that loan officer wasn't going to be the right fit, and that that mortgage wasn't going to close. And if you would have picked the second one, you would have discovered how well qualified that borrower was, and would have felt it, and would have got the information that you needed to make an intellectual decision based on that, versus not knowing it all. So these are some great questions that you can ask that loan officer to vet them. Spending 30 minutes of your time calling 2 to 4 loan officers is well worth it. It'll really save your commission, protect that commission, because you need it, and your sellers need to sell their home and move on without having to replace that house on market and have delays. This is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions and helping get your deals closed.